Good afternoon, good evening, and welcome to Technical Analysis Explained, our new show. This is the inaugural episode, our new show that will focus exclusively on technical analysis. I'm your host, Tom Schneider, CMT, with NinjaTrader. And before we get into the good stuff, I do want to remind everybody that futures and options trading contains substantial risk, is not for every trader. You could potentially lose all or even more than all of your initial investment. And that's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose, doesn't keep you up at night, and it doesn't extend your retirement horizon. I also want to remind everybody that past performance is not necessarily indicative of future results. And what we talk about here in this program contains neither trade recommendations nor financial advice, should not be taken that way, but should be taken for educational purposes only. And with that out of the way, it is my extreme pleasure to welcome Ralph Acampora, the co-founder of the Chartered Market Technicians Association. Ralph, how you doing?
Hiya, Tom. How are you, sir? Thanks for inviting me.
Oh, it's completely my pleasure. This is a treat. I've seen you many times, mostly in New York, and been inspired by what you said about technical analysis. I think you are probably the biggest proponent of and biggest advocate for technical analysis. So it's really our treat and our pleasure to have you on the inaugural show where we're trying to educate traders on what technical analysis is from a conceptual point, from an interpretive point, and actually how they might apply it to their trading. So really, the pleasure is all mine. But where are you calling in from, Ralph?
I'm calling in from Minneapolis, Minnesota.
Awesome. So great city. Been there many times. Beautiful Midwest city. I've seen some baseball, both the old park and the new park. The new park is wonderful. What do you think about that? Have you been to baseball in
Oh,
the
sure.
city?
Absolutely. It's fabulous. Everybody has to come out and see it. And I
Oh
have a
yeah.
farm not too far away, which is where I did my uh, famous chart of this entire stock market. I painted it on the outside of my barn.
Yeah, let's take a quick look at that. And it's a great video. I'm just going to pull it over, Jason, Mission Control. And let me see if I can pull that over. And this is with our friend Dave Keller,
Yes.
who's also a CMT.
Yes. He's a great guy. And he came out and you can get the whole thing. It's a 15-minute interview. It's on YouTube. All you have to do is dial 50 years on Wall Street. And we walk around the entire barn.
Oh,
Um,
that's
I had
amazing.
an idea in 2017. That was my 50th anniversary on Wall Street. And the north wall of the barn was just blank. And I said, gee, wouldn't that be nice to put the 50-year history of the Dow on it? And when the Wall Street Journal heard about it, they said, well, we'll come out and take a picture of the largest chart of the Dow in history. I said, wait, when the Dow goes through 23,000, you can say the market went through the roof, which it did.
Oh,
Yeah.
that's amazing. That's amazing. So, Ralph, for those viewers who might not know who you are, can you give us a little bit? I mean, a little bit. I don't know if we have enough time, but you know, how did you get into the markets? What attracted you to the financial markets? And then we can talk about technical analysis. How did you discover that?
Well, it's a long story, but when you ask people how did they get into their profession, most often they say by accident or it just happenstance. Well, with me, it was literally an automobile accident. I was stopped at a stop sign and a 40-ton trailer truck hit me at 60 miles an hour, and I wound up in the hospital for 3 months. And my father's very good friend was a Wall Street guy who got me this famous physician, and I had spinal fusion operation. This was in 1967. And this gentleman was, as I said, was a Wall Street guy. Mr. Downey was his name, and Mr. D, I called him. And every day he would come and visit me in the hospital. And whatever he was reading, he threw in the bed. And I was like an inverted turtle in this body cast, and I couldn't move for 3 months. And it was the Wall Street Journal, Forbes magazine, and all that. And I said to him one day, I said, you know, Mr. D, I really enjoy reading this stuff. He says, oh, that's research. I'll get you a job. Well, he took me to Smith Barney, one of the finest research boutiques at the time. And the head of the research department, director, patted me on the head and said, you go home, get an MBA, come back, and I'll give you a job. Well, I didn't want to go home, do an MBA. And then a couple of days later, I saw an ad in the paper that said, junior analysts wanted no experience necessary. I said, boy, that's my job. So I ran over on crutches, and the fellow that was interviewing me was afraid I was going to hit him over the head with my crutch because I was so excited about getting this job. I said, I'll wash windows, do the floor. He handed me a book. He said, read this book over the weekend and come in, you have a job Monday. That book changed my life. That was the Bible in Technical Analysis, written by Edwards and McGee. And from there, it's just a wonderful story. I met great people in my career.
Yeah, that's great. And I hear that a lot of times, where the intended course of your career, or somebody's career, doesn't pan out, and it pans out in a good way, right? They find another way to go.
Yep.
I can think of a lot of people like that, and that's unfortunate. It started with the car accident, though, Ralph. I'm glad glad it happened, but not the car accident.
Yeah. Well, you know what I tell everybody? Now, I didn't have a background. I was a history of political science major in college. I had absolutely no financial background. But after plotting charts, and we had to do it by hand in those days, so everything was by hand. And after like 6 months or a year, then all of a sudden I had opinions. You can ask me what I thought of gold. I tell you, well, it looks pretty good. It looks like it wants to go higher, or talked about IBM or whatever it was. And I try to tell everybody the subject technical analysis, if you do it correctly, it empowers you. It gives you the ability to have an opinion. And that to me is what it's all about.
Right. So now you're practicing technical analysis. You read the McGee book, the Bible, if you will. And at some point, we always talk about the difference between fundamental and technical analysis, and that, impressed upon me early on was how many more fundamental analysts there were, when technical analysis seemed to me to be very clear. It's math-based, it's very formulaic in some senses, but it reflects behavioral analysis as well. So it's kind of a nice blend between something you can quantify and something you can qualify. But when you were doing it, you didn't have a lot of other people that would talk about it, correct?
Now, this is the early 1970s, okay? You got to remember, at that period of time, the efficient market hypothesis came out, and they just panned technicians. Then the random walk theory came out. Flip a coin and you can make a better choice than looking at charts. Well, we had to fight that critique. And I met a young fellow by the name of Johnny Brooks on the receiving line. Every morning he had to go to the same place I had to get our price reversals to do our point and figure chart updating every day. And I met him on the receiving line one morning. And he and I were both junior analysts of the New York Society of Security Analysts. And we were treated like second-class citizens. You kids are just wasting your time with charts, they used to tell us. And then what really got Johnny and I, we were really upset and jealous, if you will, of the fundamental analysts, because listen to this, the chemical analysts would meet once a month, and the drug analysts would have their separate meetings, and the auto analysts. And one day, Johnny and I said, well, gee, why don't technical analysts have regular meetings? And that was the start of what was called the Market Technicians Association. A few years ago, we changed the name to the CMT Association, but it was that. And we just celebrated our 50th anniversary. And I have to tell you, it was the most amazing event. Everybody came. We were just so excited. And I told the audience in my opening comment that I am so proud of the people today who follow technical analysis, who are running that organization, because they have the same passion, love, and dedication for the subject that we had 50 plus years ago. And that's very exciting. And you know what? The audience, what the organization did. Now, you got to remember, in those days, the hub of capitalism obviously is New York City. And there were a handful of people out there. So with the original 18 members they became the chartered members. Johnny and I went out and found all these guys that wrote market letters with technical analysis. But there were famous technicians outside the New York area. There was a fellow by the name of Richard Russell, the living guru of Charlie Dow in La Jolla, California. Well, the organization brought him to New York, and he talked to us. A.J. Frost up in Canada, the Elliott Wave guy, we brought him to New York and talked to us. Joe Granville, On Balance Volume, we brought him to New York. I think it was in Kansas City or something. And, things like that, it really, really brought the organization together and brought technical analysis together. And over the years, we built the respect. We fought for the most important date, in my opinion, for technical analysis, modern day technical analysis. It was Friday, December 17, 2004, when myself and 3 other fellow members of the organization stood in front of 10 SEC lawyers and fought for technical analysis. And we wanted them to know that the body of knowledge that we have is as relevant as the body of knowledge that the fundamentalists have. Because we had our exam called this Chartered Market Technician, CMT exam, and we said it was equal to the CFA, the Chartered Financial Analyst exam. Well, at the end of my presentation, one lawyer jumps up and says, "Oh, Ralphie, we see you on television. You're a nice guy." And he shoves a chart in my face. He says, "What's fact on this chart?" And my knees are like rubber. I said, "Oh, my God, he's asking me a question." And I looked at the chart and I said, "Well, price is a fact." And his eyes got about this big. And I put my finger on his chest and I said, "Earnings are an estimate. You restate earnings. You never restate this chart." He says, "Damn good answer." I said, "You better believe it." Well, 3 months later, March of 2005, the SEC, FINRA, they all came out and said, technical analysis, the CMT exam, is equal to in importance to the CFA exam. And that I am very, very proud of.
Well, yeah, and you think about how the CFA association and those credentials, especially in the institutions, are much lauded and they're respected, and the CMT is right up there with that, and a lot of it because of that recognition back in the mid 2000s that you and the others were fighting for. That is an amazing story, because it really, that when you told that story, and I think I saw you tell that story maybe 10 years ago at one of the symposiums, that sealed it for me. And that, because up until then I couldn't really explain in a very convincing way why technical analysis was so important to me. I understood it. I could see the numbers and I could do the calculations, and that to me is very important, but I couldn't really articulate it. You did that with one sentence. That's amazing.
Yeah, well, thank you. I'd say technical analysis is part of doing research. If you're going to do quality research, you start off with economics. You have to have an economic overview. And once you have an economic overview, or you did your economic reading, the next thing you talk to the fundamental people who follow the companies that do well in your economic environment. Third part of quality research is quantitative research. You backtest all those PE multiples. See, if the stock or the index or the industry, the sectors you're looking at is overvalued or undervalued historically. And now you have your gun loaded. Before you pull the trigger, will you do me one a favor? Look at the chart. See if the stock's going up or down, if it's building a base or a top. Come on. That's right. Research. I call that fusion analysis, when you take all the material together and you meld them. You don't separate them. They're important. That's quality research.
Now, Ralph, it's interesting. You might be familiar with the movie or the book Moneyball, which is basically, to me, I equate it to the technical analysts versus the fundamentals in baseball, right? You have the scouts that are fundamental. You have this young guy who nobody's ever heard of that comes out of, an Ivy League school. That's the technical analyst. What's interesting is that movie pits them against each other. In reality, the fusion that you talk about in the markets, they're doing that as well. And the ones that do that successfully they're the teams you hear about in October, November every year. Just like the analysts that I seem to drift to have, they might have a CFA and a CMT, but they're not the ones who are exclusively one or the other.
Yeah, exactly. Exactly. You know, I keep telling everyone, looking at charts, you can obviously, if you're doing it correctly and drawing your trends and watching your indicators, you can get a direction that the price is in. But you got to find out why it's going up or why it's going down. That's the fundamental reason. See, I can sit here and talk about directions all day and give you all sorts of ideas, but to back it up and to do quality research, you still have to ask that question, why? And that's
So curious, in today's world, everything is shortened, everything has gotten so much closer together because of technology. Thinking back to when you started the CMT, or the MTA, I should say, back then, when you were trying to get people to come in from La Jolla and Kansas City and Canada, you had to be on the phone. You had no email. You had no instant technology. You probably couldn't even tell who was calling, right? Caller ID wasn't there. And then they had to fly in, and it was probably a big deal. I think, a big deal to get these people into New York to speak to a group of like-minded people.
Oh, absolutely. I mean, it was first of all, meeting Richard Russell was like, wow, this is like me meeting Joe DiMaggio, New York Yankees. Okay. And yeah, but at first he didn't want to come out. He didn't know me, of course, and he didn't know the organization. But over time, we were able to convince him to come out. And it was that spirit that brought everybody together, the need to share ideas. And in those days, I got to tell you that you're going to laugh when I tell you this. I thought one of the greatest inventions was the fax machine. You know why? Because I can take a chart and I can fax it to all my clients. And they can say, I like this stock, and I put a zero around or accentuate the trend line or the base, and I'd say, this is the reason why you got to buy it. Oh my heavens, that was technology in those days. That was communicating with your clients, fax machine.
Well, and at that point too, you were spending a large portion of your day just to create the charts, where now we take for granted we can just type on our keyboard and get a chart.
I got to tell you, when my lovely wife and I moved out to Minnesota, this is where her family farm is, which we bought. That was about 15 years ago. I went up into the attic of my house, cleaning out the attic, and I opened this big box that was on the floor, and in it was my war room. I had the famous war room in Wall Street when I was with Kidder Peabody between 1980 and 1990. And I had presidents of mine 30 years ago to laminate these charts. So I called my friends. I said, hey, guess what? The war room is alive. And one fella said to me, he said, hey, do you have that wall chart with the 3 Dow averages, the industrials, the transportation, utilities every day, high, low, close, with notations and moving averages and events that happened? I said, sure. He said, well, you got to take it down to Wall Street. They're doing a 160th birthday of Charles Dow, and this would be a perfect backdrop. So I bring the chart down. By the way, the chart's 8 feet high, 22 feet long.
Wow.
It was all put together and just rolled out, different levels, all rolled out. And I was rolling it out on the floor to show the lady the chart, and she said, can I cut it? I said, I'll kill you. So I was rolling it up. I was walking out the door. She said, oh, please, Mr. Acampora, don't. She said, I'll make a cork wall, 8 feet high, 22 feet long. And that was the backdrop for the exhibit. And
wow.
6 months later, this lady calls me up. She says, Mr. Acampora, this is one of the most unique things we have in our collection. Would you donate it? I said, absolutely. And then she tells me, listen to this, that little Wall Street Finance Museum is part of the Smithsonian Institute. So I keep telling everybody, we have a chart hanging somewhere in the United States, and I hope they didn't cut it.
That's great.
I have the sister chart to that in my barn. You got to come out, Tom. I've got a museum in the barn where that painting was on the outside. I got a Wall Street museum inside, and I have one of those charts, 8 feet high, 22 feet long, all hand bar. And I have a big book, and it says Ralph's database. When you open it up, it has all the numbers for all those years. And then
Wow.
2-day moving average. Just think about it. You had to calculate moving averages and everything, and the overbought, oversold oscillators. It took a staff of people every day to maintain 4 large walls of those
Well,
charts.
and especially, we here at NinjaTrader are focused on futures. You being on Wall Street, how many equities did you have to do that for, right? Because you were the analyst for either the bank or the section of the bank.
We maintained a 2,000 chart library every day.
Yeah.
Point and figure library, but you didn't need to make an X every day, thank God. But
Right.
you still had to do 300-400 of them anyway. Okay. But I still like the old way, because you know what? You got a feel for what was going on. I tried to recopy that in modern day. You know what I do? Every weekend, I get the charts from a very good friend of mine, Craig Johnson. You know Craig?
Sure. Oh,
Yeah.
I know Craig. Yeah.
Yeah, Craig he puts out one of the greatest chart books that ever existed, was the Mansfield charts, the weekly bar charts of the high lows. And I sit there and I put in all my support and resistance levels for full S&P 500. I have no computer doing it. I do it because I want to eyeball it. And I put it into my Excel spreadsheet. And every weekend I look and see if those levels are broken up or down. And I update them. So I'm getting these red flashes and green flashes for upside breakouts and red flashes for breakdowns. And it's fun. So nothing moves without me looking at it, Tom.
Oh, that's great. That's great. I had the fortunate experience a couple times to visit a war room. I'd love to see your war room, but I saw Luis Yamada's war room at Citi, and of course when Dave was at Fidelity, Dave Keller, our good friend, I got to see up in Boston Fidelity's war room. But for those of you who don't know, war room is just the term for a big room, as big as the room can be, I guess, just plastered with charts on every wall, on portable walls. What do they call that? But because that's the way charts were built back then.
Yeah, Louise Yamada, by the way, was a former student of mine. She's a good friend. She's a former student of mine. And when I left Smith Barney, which became Citicorp, in 1980 to go to Kidder Peabody, I had worked. Alan Shaw was my mentor and best friend.
Oh, wow.
He still is. And Louise took my job over. So she replaced me. Isn't that wonderful? And and so they kept the chart room going. It was Alan Shaw. When I told him that I had a job offer I couldn't refuse, he said, "But you don't have a chart room." And I looked at him as if to say, and he said, "Xerox everything and take it with you." What a wonderful man that was. Here he was telling me, you need to create your own chart room. When I walked into Kidder Peabody a month later, I had gold in my hands and they had no idea what I was talking about. And I created a duplicate of his chart room, basically, and continued it. So that's the history of that. In Wall Street, we had the chart rooms. But you're right, Fidelity had the chart room up in Boston.
Right, and they did an interesting chart that they had a stock market chart that goes back, I think, to 1789 or something, like maybe even farther back, basically equating different charts to the index, essentially.
Oh.
So
on my bond wall, I have it going back to 1857.
Wow.
And that's, at that time, was the Macaulay Railroad average that was in existence. I have that. And then in 1871, the Cowles Index. There was a professor in Yale University in the early 1930s wanted to do a history of real price action. and Cowles was his name, Professor Cowles. And the data that he felt most comfortable with only went back to 1871. And he created a weighted index. And guess what? I believe 1954, the Cowles index becomes the S&P 500. I have all that history on my wall. Oh yeah. Yeah.
That's amazing. So I will make it a point when I'm back up in Minnesota. I'm going to look you up, Ralph.
Oh, you have to.
You
have to.
see the history. You're creating art, is what you're doing.
Yeah. Oh no, I want to keep it. I want to keep the history. I love history.
So, here at NinjaTrader, we do have a lot of viewers who are new to trading. We have traders who have experience as well. But one of the things I did want to talk about is, and I guess this is a loaded question, but why technical analysis? Why is that important in today's markets with, it seems like there's something new almost every day, every week, something to be concerned about, whether we're talking about the Fed speaking, AI is the new hot tech toy. Why technical analysis?
Well, you're right. I mean, every day, that's what makes it so challenging. And I think that's what makes it a lot of fun, trying to find out what's going on behind the scenes. But what's interesting about technical analysis, I think I alluded to this before, you're going to start seeing things happen and you don't know why, because the market has it's a discounting mechanism. You might be very depressed. Oh, some of the bad news and all, but the market's not going down because it discounted a lot of that bad news. Wow. And that's the, you gotta start with that. Or even good news. Let's say the news is great and the stock is slowing down. That's because people are selling on the good news, So you gotta appreciate the fact that price has a discounting mechanism. It is a discounting mechanism, and it's what I love about it is, when we first started struggling to get technical analysis accepted, we kept telling that, it reflects people's emotion, and they wrote that off. But they didn't know that Charlie Dow wrote about fear and greed in his editorials in the late 1800s. And then I guess it was in the, I'm going to say 1980s when behavioral finance started to come on scene. And people say, oh, this is interesting. I said, guys, we've been doing this forever. Come on. It's all reflected in price. That's the knowledge that people have. I make an assumption every morning when I get out of bed, someone out there is a heck of a lot smarter than I am, and they're buying and selling on information I do not have. So I got to watch what the majority of people are doing, or the insiders are doing, or whatever, behavioral finance. That's all part of it. It's great.
And it all comes out in the price. I mean, that's what it is, right?
Absolutely.
The behavior is based on information in toto, in mass. Not everybody has access to the same information, and not everybody's making decisions for the same reasons, but that information is baked into the price.
I gotta say this, Tom. And I hope my viewing audience listens carefully. We have lots of indicators. Everybody comes to me and says, well, Ralph, what's your favorite indicator? If you put a gun to my head, which one would you use? Well, I think they all work some of the time. They're nice. Momentum, sentiment, and that's great. That's great stuff. But remember one thing: you don't own the RSI or the MACD. You own price. So the first thing you look at is price, and you better be able to draw a trend line. You would think that Ralph Acampora is so happy listening to these talking heads on television talk about Liberace, Fibonacci numbers, and they're talking about moving averages, and they're drawing lines. They don't know what they're drawing. Some of these lines are ridiculous. They're incorrect. They're not drawing correctly. Please read the book, study up, and draw a trend line. The trend is your friend. Keep it simple is my message.
I love it. I love it. Ralph, thanks so much. We're right up against time, and I could do this certainly for, more than extended time, but I want to thank you for your time. I know you're very busy. Is there, any last words, anything that our viewers should be looking at?
No, just respect price, get clean data, get the most recent data. Don't look at old charts. Get current data, and you have it. It's so available. You're so lucky today. I mean, you have it on your cell phone. Years ago, we had to wait the next day before we got the prices. Then I had to plot it before I could view it. So respect what you have, and just follow the basic tenets. That's
Awesome.
the message.
Really appreciate you coming on and kicking off our series, and
Thank you, Tom.
hope we can have you back on in the future. And again, thank you for your time, and I want to thank the viewers for your time as well. Thanks for coming, and we'll be back 3:15 today with bars closing. Mike Burke will be closing it out. So in the meantime, have a great trading day.